This video, titled How Everyday Consumption Creates Decades of Cash Flow, provides an India strategy deck for FY 2026-27. We will cover key macro and market intelligence indicators, including the repo rate, CPI, GDP, and adhesives market size and growth forecast. Our table of contents outlines the video, starting with an India macro snapshot, followed by the RBI's policy and rate trajectory. We will then examine global macro headwinds, the India adhesives and construction chemicals market, company financials, market structure, trading strategy, and finally, risk factors and data sources. The India macro dashboard for April 2026 shows the repo rate is held at 5.25%, with CPI inflation projected at 4.6% for FY27E. GDP growth is revised down to 6.9%. India is currently in a Goldilocks phase, but inflation is rising, and the RBI is holding rates steady. Construction demand, a key end market for adhesives, is supported by infrastructure spending. The RBI monetary policy shows the repo rate held at 5.25%, maintaining an affordable credit environment for real estate. Stable rates support housing starts and infrastructure spending, driving demand for tile adhesives and waterproofing. However, rising CPI may compress urban discretionary spending. Global macro headwinds, such as the West Asia conflict and US higher for longer interest rates, pressure the Indian rupee and raise raw material import costs. The dominant market share of key players allows them to pass on input cost inflation, protecting margins in the medium term. The Indian adhesives and sealants market is valued at $3.5 billion, with a forecasted CAGR of 6.9% through 2031. A dominant player holds over 65% market share, with extensive dealer reach. Key growth drivers include national infrastructure, a real estate upswing, and the e-commerce packaging boom. Consolidated Q3 FY26 revenue reached 3,699 crore, a 10.2% increase year-over-year, while EBITDA margin improved to 24.2%. Profit after tax was 624 crore. The business is heavily skewed towards consumer and bazaar, which accounts for 81% of revenue. The current Nifty 50 is estimated at around 24,100, while the Bank Nifty level is near 52,000. Specialty chemicals have shown strong rotation, with 12.3% growth year-to-date in FY26. Realty is also performing well, while the oil and gas sector lags. In the bullish scenario, a correction in crude oil and an RBI rate cut would target a Nifty of 25,500 to 26,000. The range scenario, based on geopolitical uncertainty and crude between $95 and $105, targets Nifty 23,200 to 24,800. Risk management involves defined stop-loss, position sizing, and hedging strategies. The risk register highlights crude oil spike and INR depreciation as high-level risks, while rural demand slowdown and competition intensification are medium risks. We rely on a structured hierarchy of official data sources, including the RBI, MOSPI, and NSE, for market insights.